Hello, I'm Finola Burke from RaaS Research Group, and we're catching up today with Airtasker CEO and founder Tim Fung and CFO Mahendra Tharmarajah to discuss the company's recently announced media deals in the UK and US. Welcome, Tim and Mahendra, and thanks for joining me.
Thanks for having us.
Thanks for having us.
Well, Tim, you've announced media partnership deals with Sinclair Broadcast Group and Mercurius Capital in worth US $12 million in the US and a follow-on investment of £4 million from Channel 4 in the UK. What will these media deals allow you to do in both these countries?
Well, starting with the Channel 4 follow-on investment, I think the first thing is it's great to be doubling down with Channel 4, and they're obviously really happy with how our investment's going, and it's great to be accelerating that in the UK. What it's going to allow us to do is to continue to build brand equity in the UK market and expand outside of just London to other very large cities like Birmingham and Manchester. In terms of the US deals with Sinclair and Mercurius, the US is a huge market, clearly, and there's lots of different segments of the media landscape. So our original deals with Televisa Univision allowed us to reach the Hispanic market, and with iHeartMedia address the audio market. These deals with Sinclair allow us to cover a lot of the second-tier cities across the United States. So, for example, Seattle, Washington, D.C., Austin, and Las Vegas, as opposed to some of those larger cities like New York and Los Angeles. And then the deal with Mercurius Media is even more exciting because it creates flexibility for us to choose different media partners as we see what's working. And so some of Mercurius's current limited partners include Sinclair and Televisa. So if they're going well, we can put more of the money to work with them. But also, as they expand their suite of limited partners in terms of media, we can get the opportunity to potentially invest through those networks as well.
And Mahendra, the structure of these deals is quite beneficial to Airtasker in terms of conversion of the media capital to equity or repayment. Can you take us through how they work?
Sure. So we did three notes that we announced yesterday. So as Tim mentioned, one was with Channel 4 in the UK, and then two with Sinclair and Mercurius in the USA. So if I start with the US deal, so we have a US subsidiary. So in September, we announced that we'd issued equity to Televisa Univision for about 17% of that entity. So we own the other 83%. And so what we've done is we've issued the notes in that subsidiary. So they're not in the parent entity, they're ring-fenced. The risk, I guess, around the notes is ring-fenced in the subsidiary. And it goes through a couple of phases. So firstly, a large portion of the conversion decisions rest with the issuer in this case, rather than the holder. So that's quite unique, I think, in the structure of the notes we've put together. So basically, there are two primary forms of conversion. And so the notes are both are 4-year notes. And so the first event that might occur, and the most likely one, is that we run to maturity. So in 4 years' time, the company or the issuer has the option to either repay the note plus the coupon, so the coupon's 5%, or convert the note into equity in the local subsidiary. And the way that is done is that there will be there's a valuation mechanism. So it cascades through either its mutually agreed valuation of the subsidiary and the equity and how it converts. And so they convert in at a discount. Obviously, one of the benefits of a coupon structure, of a convertible note structure, is that you get a discount on the conversion into the equity round. The other form of conversion might be if we did a financing round. So if we did and there are thresholds of what constitutes an acceptable financing round. And so if we run a financing round where we bring in new money, we can convert them at our option again into that round. So those are the two main scenarios. Now, what happens if so let's assume the note is or the business is very successful in that 4-year period, and so the US operation is turning over significant amounts of revenue. That's actually quite a strong position to be in for the US entity. We can then pay the note back, which might be one option. Or if maybe it's not performing as well, or it's a bit slower in the uptake and we're taking a bit longer to get traction, we could convert them into equity. And then what happens is you go into the second phase of how these notes work. So then they become equity. And so then they fall into the structure that we have with Univision, which is basically we have a model that ties the valuation of what we buy the equity back in. So there's a fixed term point at which we buy the equity back. And in the case of those two notes, that's then 5 years. And then the calculation for that ties the valuation of the US subsidiary to the group valuation. So it comes back to that parent, the parent multiple valuation technique. So I think what that does is it ties everyone into having, aligned interests. And so the partners obviously want to maximize the value of the US subsidiary. And we benefit from that because we own the other 80% or whatever, 83% in the case of the US at the moment. And so then if you look at the UK structure, it's identical. So it's basically the same thing. Obviously, in this case, Channel 4 are already an equity holder as well in the UK, so they own 20% of the UK business. And it's testament to their, I guess, belief in the model, the performance of the first 3.5 million sterling they put into the business in the UK, that they then doubled up and have now invested another 4 million. So I think it's really terrific.
So effectively, that ring fences the Australian operation, so it doesn't affect the Australian operation, and you're essentially applying value but based on performance of the group. So your actual performance of those US or UK operations. So you're not losing on either front.
It's 100% performance-based marketing. So if the marketing goes really, really well, then the whole group benefits, and obviously Airtasker benefits and its stakeholders and shareholders benefit. And if it doesn't perform so well, the downside risk and contagion is ring-fenced to the subsidiaries.
That's fantastic. So Tim, you've already alluded to this, but the US market's a very large market, and you do have a lot of reach. And I think you touched on a couple of the small, you're looking at potentially a couple of the smaller cities. Do you have any specific markets initially that we could see you roll out there?
Yeah, so currently we've focused purely on the Los Angeles market, and it is a very large market in its own right, about 23 million people in Los Angeles. Sinclair and Mercurius give us access to that next tier of cities. And so we've looked at a number of options there, and it's likely that in the next 6 months, in the second half of this year, we will explore at least 1 to 2 new additional city launches. I think the really exciting thing is that over the past 12 months, we've really started refining our playbook for launching 0 to 1 into new marketplaces and establishing new city level network effects. So we've got a 4-point playbook that we use to launch it. And that's making it a lot more predictable to get from 0 to 1 in a market. And that's the really hard bit to work out, when there's nothing there, how do you just breathe life into a marketplace? So we've got that down pat.
And just to follow on from that, I mean, Sinclair's got a number of sports channels as well. So and other specific, I guess, genres. How important are these to your plans?
Sports is super interesting. Obviously there are huge fan bases for these various sports, and the US market loves sports, just like Australians and Brits as well. So that gives us an advantage. But what I'm really excited about is some of the lifestyle programming and the local news that Sinclair creates at a local level. So if you look at shows like, Good Morning Oklahoma, or Wake Up Las Vegas, or, We Are Austin, these are all great local morning shows that have local followings and are really trusted. Then when you look at the local news, these local news anchors at the city level, and again, very large cities, even though they're the second tier cities, these are 5 million plus people cities often, they are very trusted content creators. And so if we can get them to give Airtasker a crack and have a great experience, we're going to be able to get a lot of earned media opportunities from that.
And Mahendra, just on the logic of extending the Channel 4 deal, I mean, I think you've alluded to the fact that there is access to newer audiences. Can you take us through a little bit more on that and the plans there?
Sure. So, obviously, as we mentioned earlier, the team at Channel 4 are really keen to follow on and participate in further investment. So that's because of the performance so far in the 12 months we've been working with them. I think when you look at the way the Channel 4 network works, is they basically do give us access to all their markets on day one, or did on day one last year. we chose very strategically to launch specific cities, so not dissimilar to what we're doing in the US. We chose to launch in London only, and principally focus our marketing activities around the London market. Then this calendar year, a couple of months ago, we launched Birmingham, and then a month or two ago, we launched Manchester. So we've now got 3 cities live. And so obviously the more cities you have, the more marketing resources you require. And so you're booking slots now, and obviously marketing that's more specifically targeted to those cities and those areas. And so that's what we're doing. So the additional media capital from Channel 4 aligns with, I guess, our expansion strategy, and so will enable us to now market to those new cities. And yeah, they're all running concurrently. They're all at different stages, but you need to be activating those new cities rather than trying to get to one that's completely at scale, then do the next one. It just takes too long that way. So yeah, it's just about accelerating the marketing expenditure and traction.
And Tim, what can we expect? When can we expect to see the impact of these media deals in actual earnings? I mean, do you think it'll be early in 2025 or towards the end of 2025? It'd be good to just have a feel for that.
Well, as a reminder, our UK acceleration is going really well. So when we started deploying the media with Channel 4, we saw initially about a 25% or 30% jump year on year. And then as the year progressed, after March quarter, we were up about 50%. At the June quarter, about 75%. At the Sep quarter, about 100% year-on-year growth, which is exciting to see. And we're going to continue to see that momentum build up. In terms of the US market, we're at a much earlier stage. We've built up, some significant traction there already launching these media deals. I think you'll start to see results certainly start to occur in the March quarter. You'll start to see some action happening on a relative basis, but it's coming off some pretty small numbers. And I think you'll see that accelerate that same way, probably about a year into it. We certainly are aspiring to be at that multiples, 100% plus sort of growth year on year.
Well, thank you, Tim and Mahendra, for your time today. I'm looking forward to catching up with you over the course of 2025 to check on Airtasker's progress.
Thanks, Finola.
Thanks, Finola.